Hi everyone, welcome to this live show. Let me know, guys, if you can see and you can hear me. Just type a one, in chat, guys, if you can see and you can hear me. Welcome to this live show called One Good Trade. Just type a good morning, type a one in chat. Okay, good. Thank you so much. I think we have like Steven. Hi, Dave, Ray, Askew. Good to see you here as well. For those of you who can see and can hear me, you can see my screen as well. All right. Go ahead just to type a one or type a good morning. Hi, Kathleen, Joe. Welcome to this live show called One Good Trade. Okay, good. Welcome, guys. Let's get started right now. Today I have a very special guest right here. Jamie, can you see and hear me? Okay, this hangs again. All right, welcome, Jamie. Can you hear?
Hello. Hi, Joey. Hi, everyone. Thanks for tuning in
Okay.
today. Very,
Yes.
very excited to be on your show.
Thank you
The
so much,
One Good
Jamie.
Great Live Show.
Yeah, so welcome everybody. Today we have Jamie from Macquarie, all right, who will be sharing about something really exciting about how one can actually use warrants to take a position in a stock, right? But not just take a position in it like how we normally do it, but how you can actually increase your returns or your ROI by using warrants, right? So that's why Jamie will come in later. Very excited to have Jamie on my show today. And the name of this show is called One Good Trade live show. Why one good trade? Well, essentially you just need one good trade, right, to really see your portfolio grow, to really maximize your gains, and that is all you really need, right? So thank you so much for joining us. If you're just joining us, you're scrolling through YouTube and Facebook. We are kind of like streaming live on YouTube and Facebook as well. All right, welcome to this live show called One Good Trade. All right, I'll do a very quick coverage of just one stock that is in my watch list. And that is where, after covering the stock, doing a quick technical analysis, why I like this stock, what are some of the potential entry levels, and then Jamie will come in and share with you how to use warrants to take a position potentially in this stock to maximize your gains, right? Sounds good, guys? All right, just type a one in chat if you can see, you can hear me. All right, thank you so much. Let me just go to put your hi. We have a Sylvania. Hi, Joe, Kim, Kathleen. Good to see you as well. Ahyok. All right, so we have many familiar faces. Hi, everyone. So let's get started right now. So this show is brought to you by Macquarie. All right, and we will have a Q&A as well at the end, guys. In case you have any questions on like warrants, and that's where JB will do her best, all right, to also answer any question you have on warrants, all right, just to bring a little bit of awareness on how one can trade warrants on this particular stock that I'll be sharing, right? So just a quick disclaimer, right? Whatever they shared today is just for education purpose only. Right? Please do your own due diligence. It's not to ask you to buy or to sell, not to buy or not to sell. All right. Essentially, this is just for education and information purpose only. Right. So let's get started right now. All right. And let me talk about this stock. I want to share with you guys that is in my watch list, I would say, over the past couple of weeks. And this stock right over here is called Seatrium, Seatrium. The code is 5E2, right? 5E2. How many of you have heard of this stock called Seatrium before? Just type Y for yes. If you have heard of this Singapore stock called Seatrium, 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 type of Y if you have heard of this stock before. Okay, good. So I think some of you have heard of this stock before, Seatrium, and I think we have just shared it with some of our clients as well in Philip Securities. And in this stock right over here, you can see that we are trading at about $2.04, $2.04 right now. So let me just explain to you why this stock has came into my watch list over the past few weeks. So for Seatrium, you can see over here, since like maybe last year we were actually in a pretty much a downtrend, because we actually hit a high of somewhere around like $3. Look at this, right? $3, trading sideways, I would say just below $3, and we broke down the $2.40 support. You can see the trend started to turn down, and we could actually draw what we call a downward sloping channel resistance line. So this was kind of like a bit of a downtrend, forming what we call lower highs. It broke the 240, it broke the $2 support, and it goes down. So a bit of a downtrend, I would say, since like July last year. Not so good. Probably don't want to buy then, right? But over the past 2 to 3 months, let me just remove this line. You can see that over the past 2-3 months, we have kind of like found a little bit of a bottom around the $1.40. So we touched like 140, you know, like 1 time, 2 time, 3, 4 times right over here and rebounded from it. So a little bit of a support coming back around 140, great. But it doesn't mean that the downtrend has ended yet, right? It could just be consolidating a little bit above 140, moving sideways. So when did that confirmation actually came, right? In terms of like a more a potential reversal, starting to happen. Well, you can see that somewhere around like September last month, we were actually trading below this $1.80 resistance. So something like what we call a double bottom. You can see it's up, down, pump, right? So we rebounded like 2 times at this bottom, around 140, rebounded up. And this 180 resistance that we've been trading below since June actually kind of gave way, right? So 180 broke, and that is a good sign whereby we can potentially start to push even higher, right? And yeah, the next day as well, we broke this psychological $2 resistance level. So I mentioned, right, this $2 is a very key psychological resistance level that we've been trading below since like beginning of the year. Look at this, right? $2 resistance, we sold down, same thing here, sold down. We could not get above that $2 since like February this year. For about 7 to 8 months, we're just below it. And previously as well, last year, it was the support. So you can see quite clearly this support we have broken down. It became a resistance. So we managed to finally get above this $2 resistance level, which is now a support level. And that's the reason why this stock has came into my watch list. All right, let me just turn this line, this resistance red line, to green in color right now, because now that would be a new support level. And over the past 1 week, you can see that we are actually still holding above this $2 support. I think the price now is like $2.05, $2.04. All right, and we're still holding above this $2 support level. So that could be a potential entry, especially with the size of the reversal coming in. As I mentioned, right, since last year, November, all right, or maybe even like September, a year back, it was in a downtrend. Forming lower highs, and also from the longer term moving average, the 100 days moving average has crossed down below the blue line. So red below the blue, 100 days below 200 days moving average, a little bit of a downtrend, I would say, right? But right now you can see that there are signs of the longer term, the red and the blue line starting to, not really like pointing up yet, but starting to point up, right? They're moving sideways a little bit, right? Maybe this red line is slowly pointing up, this blue line is flattening out a little bit. And if the rate to go above the blue, well, that could potentially mean that the longer term trend has turned from down to sideways to up. Does it make sense? All right, so that could be a potential reversal. And as I mentioned, in terms of the price action as well, we have broken above the $2. So that's another signal we are holding above $2. That's a good thing. And it seems like right now, in terms of a reversal candlestick price action, we are seeing a little bit of a doji right now. 2 days back, we got a doji. Doji is what we call like a reversal candle. So if you see prices going down, you see a doji holding above the support. That is where it could mean that some bargain hunting is coming back. Buyers are supporting that level. It could lead to a potential reversal. So it's another signal. The third signal, the fourth signal would be right over here. This 20 days moving average line, the green line, which represents the short-term trend, has been pointing up since like September, as I mentioned, right? We broke the 180, it's been pointing up. Right now, it is still kind of like pointing up. So that's the kind of like the fourth signal that shows that this, the short-term trend is still up. So I think that potential entry could be anything above $2. I think the next 2 days will be pretty important as well. We continue to stay above that $2 level, all right? Anything like 205, 204, 203. Potential entry could be near there on dips. Stop loss below $2 in case it breaks $2, right? Like one of stop loss like 195, 196, 194, just to protect the downside. But if we hold above $2, potential upside could be all the way a 17% upside. You can see right over here to that $2.40. So why 240? As I mentioned, right, 240 was that resistance, was a support broke down, resistance level right over here as well, and potentially we might hit over there, and that's where some selling can happen again, right? So that is the kind of like the upside targets for Seatrium. Anything on dips above $2 could be an entry, all right, all the way up to $2.40. That would be like about a 17% upside just by taking a position on this underlying stock itself, right? This type F for follow, type F for follow, guys. If you guys are following me so far regarding like, how this could be a potential entry, why are there some signals that could show that potential reversal? Type F for follow if you guys are following me so far. All right, let me know. And if you can help me out, guys, go to hit the like and share button as well. Hit the like and share button so that we can reach out to more people. And very soon I will have like Jamie on the stage as well. Jamie on the stage just to share with you guys now that I've shared kind of like a quick opinion on Seatrium, how all of you can actually take a position using what we call warrants. All right. So thank you so much. F, follow, Ellen, Jerma, SQ, follow, Andrew. Thank you so much. Follow. Awesome. Sivana, follow as well. Okay, very good. So yeah, hit the like and share button, guys, so they can reach out to more people. All right, because this is like the first time we're doing this live show called One Good Trade. Normally, I used to do what we call like, ask me any stocks, but that'll be for another time. All right, that's where I'll cover the stocks that you guys are asking about. But for today, this show is brought to you by Macquarie, all right, who will kind of like give their take on how you can actually take a position on warrants. All right, okay, so let me go ahead to have Jamie. Jamie, you still there?
Yes, of course. This is very exciting. Seatrium does look very exciting based on the chart that you're sharing, and indeed, I am following. Although I haven't typed in F, but this is very exciting, Joey.
Okay.
For Seatrium, I think we currently are at the support level that you mentioned, which is above $2. So, indeed, I think that that is why you've called this show One Good Trade, right? Because we're really looking at the stock where it looks primed for a potential entry. And if that was the case, if all of you tuning in now do believe that Seatrium is looking very good and is poised for further upside, potentially 17% from here to where Joey is targeting at about 240, why not consider a warrant, a call warrant over Seatrium to leverage your view on Seatrium? The reason why we will be using a warrant, well, I'll quickly demonstrate why that would be the case and how the warrant could potentially perform based on Joey's view. Now, in order to do so, I would like for you to have a look at our website, warrants.com.sg. All right, over here, warrants.com.sg. That is the homepage for Macquarie's warrant website. We do have many tools available in order to help investors, better understand warrants. And one of the tools to help you simulate the price performance as well as the holding period of any warrants is called the warrant selector tool. It's found on the drop down here on under warrant tools, the second tool. Now, in this case, we will select Seatrium and we will select a call warrant because we are feeling bullish about the stock, right? And we think that the stock will go up and therefore we want to use a call warrant to leverage on it because a call warrant will track the underlying to go higher. Right now, we're looking at the last price of 205, which, like I said, is above the $2 support level that Joe is looking at. And if we were keen to enter into a bullish trade via this warrant, we simply need to put in our target exit price on the stock. In this case, it will be 240, which is 17.1% higher from here. To find out how the two warrants available over Seatrium that are trading on tight spreads will perform, we need only to click on the number of weeks, we increase it. In this case, increasing it by a minimum of 2 weeks, you immediately see the simulated returns of the warrants here. Now, there are two warrants here, one with a fire logo to suggest that this is the hot warrant or trending warrant, which has got the tightest spreads and highest liquidity. Now, in this case, you see that if Seatrium moved higher for 17%, in a week's time, these warrants will generate returns of between 48 to 59%. And this is exactly why some people will want to consider using warrants because of its ability to magnify the gains based on your bullish view. In this case, it is moving between 3 to 4 times more than Seatrium shares. Okay, in 2 weeks' time, the percentage gains would range between 45% to 56%. And we need only to keep increasing the number of weeks here. And what you will notice immediately is that the percentage gains on the warrants are falling, right, compared to a week from now. Why is that? The reason is due to the holding costs setting in, known as time decay. Now, how time decay works is that the longer you hold onto the warrant, the lower the warrant value due to the lowering of the time value of the warrant. So therefore, with the warrant product, the quicker your target view, your target exit view is realized, the better your gains, right? The better your geared gains. In this case, we keep increasing the number of weeks to find out what the maximum holding period of these warrants can be. We increase it to the point where the simulated returns appear to be similar or not much geared compared to the return of Seatrium shares. Now, immediately at the 12-week mark, what you notice is that the second warrant here, LJGW, has expired. What this means is that if you're looking at this warrant, which costs about 3.2 cents right now, the maximum holding period for this warrant is only 11 weeks, whereby you will get 47% gains if Seatrium were to go up by 17%. However, if you're keen to hold for 12 weeks, so your view is that it could take about 12 weeks, you want to be a bit more conservative, then you would need to be looking at MPEW instead, of which the warrant will go up by 22.6%, given Seatrium's 17% gain. Now, this tool tells you in terms of the number of weeks, right, that the warrant would increase or move by. If you wanted to get a better indication of the approximate date that you should be looking at, there is another tool known as the calculator tool, which works the same way. How do I access the calculator tool? We click on the warrant code here. In this case, MPEW, if you're interested to find out more about it. Okay, you click into it and you'll be taken into the warrant calculator tool. All right. In this case, it works the same way. Change the target to 240. And then we saw earlier that if you hold on to 12 weeks, which is about 3 months from now, that is the approximate maximum holding period. Why? Because the percentage gains are going to be similar to Seatrium shares. So in this case, if we change it to about 3 months from now, that's about 10th January, you'll find that the simulated returns here are consistent with what you saw in the selector tool, whereby if Seatrium shares took about 3 months to go up by 17.6%, what you'll find is that the warrant price would only go up by 19.4%, which is not a lot more gearing compared to Seatrium shares. In other words, the maximum holding period or date that you should be looking at is around the second week of January if you're holding on to this Seatrium warrant. Now, what happens if Seatrium doesn't go to 240 during this period of time? For example, if it stays around, its current price of 204, in this case, this warrant will now be down by 29%. So in this case, you can see how gearing has worked both ways. It's able to amplify your returns if your view was right. But if your view was wrong, the percentage returns or losses will also be amplified. So that's something you have to know. So to repeat, the maximum holding period based on Joey's view of about 240 target price for this warrant, Seatrium warrant, known as MPEW by its 4-digit alphanumeric code, which is the same code that you type in your brokerage platforms if you wanted to trade it, is 12 weeks or around the date of 10 January. So please use this tool to find out, what kind of further returns that you could be looking at if your view was that it will go on higher. So for example, if you thought that it could even burst above 240, in this case, holding it until 10th of January, which is 12 weeks from now, will continue to give you leverage gains versus Seatrium's share price gain. Joey, I hope that was useful for you as well as your investors who are tuning in on how to use the warrant to leverage on your view on Seatrium shares.
Yeah. Thank you so much, Jamie. All right. So right now, okay, so you can see both our faces. So maybe you guys have any questions regarding like taking a position on warrants, please go ahead to type in the chat so that we have Jamie here, the expert in structured warrants, to enlighten us a little bit. So any questions on warrants, guys, like how can one take a position? And by the way, those of you who ask like questions, right? You will get like a $10 Taka voucher, all right, sponsored by Macquarie, just to thank you guys for really participating in this as well. So any questions on warrants, type it in the chat. If you need more clarity as well, type it in the chat. For example, we have like, as I said, this, Seatrium right here. How can one actually take a position, right, using warrants? So anyone have any questions on warrants? Like, I think it's very interesting how, Jamie has done what we call like the projected returns in 1 week. Let's pretend that Seatrium would hit to like $2.40 in 1 week, right? If you hit there, you buy the underlying, well, that would be like a 17% gain, right? But if you get in on the warrant, right, it will not be 17%, it'll be like a 48%, right? 48%, which is like about 3 times more, close to 3 times more higher ROI just because you get in the warrant, right? And I think one thing about warrant is that you want the stock to move in your intended direction fast, all right? So that there is, the time decay will not set in. So it's not meant to like buy and then you keep the warrant for like a few months or years or what. No, right? It's meant to get in fast. You want the price to move fast in your intended direction. You get out and you make some profits, right? So I think we have a question right over here. Let me see what questions we have right over here. Let me show, right? Wilson, right? Is there any stop loss for warrants? Is there any stop loss for warrants? Very good. Maybe I can just leave this question to Jamie. All right, Jamie, right over here. Let me just go ahead to put right here. Yeah, okay, Jamie, go ahead.
Thanks, Wilson, for the question. This is a really good question. Is there any stop loss? Well, if essentially with warrants, you really use it to leverage on your view on the stock, right? Therefore, the projected exit levels and the entry levels are very important. In this case, we're on a One Good Trade live show whereby the entry level is where the stock currently is, and the exit level, as we've discussed, is $2.40. So the question on where there is any stop loss, there should be. In this case, Joey, I guess the stop loss question is more yours, because where do you see the stop loss on the Seatrium shares at? I know you mentioned this key support level of $2, $1.90 to $2. So where would the stop loss on the stock be? Because that helps us address where the stop loss on the warrant will be.
Very good. So let me just go ahead to explain that as well. All right. So essentially, if you're looking at the underlying stock, right? So this is back to Seatrium, right? So I mentioned that $2 would be a pretty good support. We've been holding above it for a few days now, for 4 days, right? We're still above it right now. And if you would like to take a potential entry, right? How one could build a plan. So I think in the stock market, all of you know, right? There's no such thing as guaranteed, it will sure go up. No such thing, right? But what we can do is to build a plan that makes sense, right? The plan that gives us a higher reward for that risk that we are willing to take, right? So let me just go ahead and maybe come up with a plan. So for example, let's say from the underlying stock, right? And later Jamie will talk about the warrant. So for example, let's say we have a target as mentioned, maybe all the way to 240, 238, and then entry maybe somewhere around here. And we would have a stop loss just in case the $2 were to break down. Maybe we have a stop loss just below $2, maybe about 195, 196, 195, right? Something over here. And just by looking at this, you can see that would be a reward to risk ratio of 4.37. Let's just say 4 times. That means if you were to just buy the underlying, if you lose $100. If it goes to your target, you'll make 4 times 100, you'll make $400. So that's what we want. We want a high reward to risk, kind of like a position to take, right? So that is kind of like the stop loss from the underlying. It could be anything from like, below $2, 195, 196, but not too near as well, right? We don't want to just hit and rebound back up, but I think we're going to give a bit of allowance. So I think 195 could be a good stop loss for the underlying. Jamie, maybe?
Well, yes. So, Joey, if you can share my screen.
Sure.
Based on the 195 stop loss, again, using the selector tool, which was the first tool I used to demonstrate the projected returns on the warrants based on Joey's target exit view 240. It can be used in the same way to find out what the projected returns of the warrants will be based on the stop loss. In this case, I'll type in 195 here under the target price, which is 4.4% lower from where we are today. And you immediately see that, versus the stock, we're again looking at geared losses, right? Magnified losses. If it happens a week from now, that's 12.5% lower. 2 weeks from now, that's 15.6% lower. 12 weeks from now, that's 37.5% lower. So you can see the magnified losses here as a result of getting your view wrong. Now, how can you then put in your orders for cut loss based on this, 195 stop loss? If it happened during the day, for example, if it happened today or tomorrow when you are looking at it, one way of finding out what your order on the warrant price should be in order to cut loss is to use the live matrix tool, which we have here. When you click on any warrant code, you're automatically taken into a live matrix. Now, what is the live matrix? It tells you where the warrant price is live versus alongside the underlying price. In this case, you can see right now the Seatrium call warrant NPEW is quoting 3.1 cents bid, 3.2 cents offer based on 2.03 on the bid for Seatrium and 2.04 on the offer. Now, if today Seatrium were to go down to 195, which is Joey's cut loss level, and if you had bought the warrant at 3.2 cents, you would be putting in your cut loss limit sell order at 2.8 cents, right? Because that's where Seatrium at 195 will be for the warrant. Okay, so live matrix tells you exactly where the warrant prices are alongside its underlying live on the day. Of course, another way of doing it, if you're not able to log on to look at your website to know what the warrant price is, or for example, if your stop loss was lower at 119, you can't see it on the live matrix. One good way of quickly finding out what your limit sell order in order to cut loss on the warrant will be is to call us at 66010289, and we will be able to tell you what the warrant price based on the underlying price for the day will be. So that's the shortcut way of doing it. And now you know because you have dialed into this One Good Trade live show. I hope that answers your question, Wilson.
All right, thank you so much, Jamie. I think really interesting how, just by looking at the live metrics, guys, just by, in terms of the underlying price, on the live metrics, what is the, warrant price, and then you can set your stop loss accordingly, right? So thank you so much, Jamie, for explaining this particular aspect of warrants. So let's take a look at the next question. And by the way, guys, if you have any questions on warrants, we have an expert right over here, Jamie Chung from Macquarie. Type in the chat. All right, let's go to the next question. And that would be from Ray Lim. How's the liquidity for the warrants? How's the liquidity for the warrants, right? Jamie, want to go ahead?
Okay, well, there are two ways of looking at the liquidity. First of all, you go to your brokerage platform. In this case, it could be any broker platform that you use to execute on your shares. It's the same platform that you can use to execute on any warrant trades. And immediately there, you'll be able to see what the bid and offer volumes are, the liquidity is. So that's one way of seeing it. The other way of looking at it is, again, on the warrants website, which we hope you can use alongside your brokerage platform or your charting tool. So in this case, how we see it is, you have your charts up like Joey, and then you go to your brokerage platform because you're interested in the warrant. And then you can also open warrants.com.sg to use the various tools available. Now, if you're looking at my screen, Joey, you're sharing my screen. Again, back to this warrant NPEW, there is the warrant terms page, whereby you get to see what the warrant price currently is on the bid, and what the traded volume is for the day. In order to see what it is on the bid and offer price, there is a warrant search tool. Okay, in this case, we can look straight for Seatrium, or we can just scroll down. All right. So here, these are the two Seatrium warrants available. You see what the bid volume is and what the ask volume is. Now, like I said earlier, the fire logo, which is the representation for a trending warrant, meaning those with the highest liquidity as well as spreads, tighter spreads for the underlying, in this case, NPEW, it's got the highest liquidity indeed. It's got 3 million units of warrants on the bid and 3 million units of warrants on the offer. So, if you're keen to buy up to 3 million units of this warrant, no problem. Once you lift it on the offer, we would refresh it and you will see another 3 million units. The reason for that is because Macquarie is the designated market maker of all our warrants, and our role is to provide continuous buy and sell prices as well as liquidity. Now, some people have the common misconception regarding liquidity that only warrants with high traded volumes are liquid. However, this is not the case, because even if no one was trading it, you will see that we are on the bid and offer prices as well as liquidity that will constantly refresh and move according to the underlying price. So even if no one else was trading it, Macquarie will be there on the bid and offer. There are, however, a few exceptions, and that's noted and stated on our term sheets. The most common exception being when the warrant value falls below 0.1 of a cent, which is the minimum bid price, of a security. Typically, because it's very close to expiry, it's going to expire soon, and it's worthless. In such cases, the market maker is no longer obliged or obligated to provide a bid price, and therefore you don't see us in the market. But otherwise, we are always there on the bid and offer price as well as liquidity. And I hope that answers your question, Ray. Liquidity of the warrants on each side.
Okay, thank you so much, Jamie. All right, very good. So definitely, guys, you can see that as the market maker or in Macquarie warrants, the liquidity is there. All right, the liquidity is there. All right, so you will be refreshed and you will be able to see the buyers and sellers there. All right, and that's how you are able to take a position. All right, so let's move on to the next question, Jamie. All right, let's see. We have next question by Kamchon. Right, what happens to the warrants after the expiry date? Jamie, go ahead.
Well, okay, so first of all, let's go back to this warrant NPEW. So this warrant, let's look at the expiry date. the expiry date of this is embedded in the name of the warrant. In this case, you see the 6-digit numbers here is in the year, month, date format, which means this warrant expires on the 30th of April in 2025. However, that differs from the last trading date, which is 5 business days before expiry, and that's standard, which is why on the warrant search tool, we don't actually display your expiry date. We display the last trading date for the warrant in case you want to sell out of the warrant. Now, what happens if you hold the expiry? I think first of all, I'm hoping you don't hold the warrant at expiry. Okay, warrants are for you to trade in and out of based on your target view to exit as well as cut loss. Okay, as we have seen from the example using the calculator as well as the selector tool, the longer you hold on to the warrant, okay, basically the lower your price gains, right? So I'm going back to the selector tool here. Okay, it's not loading yet. It's okay. We use the calculator tool. Whereby the longer you hold on to the warrant, you find in our examples earlier, the harder it is to make leverage gains because why? Time decay has kicked in and that's eroded the gearing of the warrant. Okay, so hopefully you don't hold it to expiry, because if you hold it to expiry, what this means is that the time value of the warrant will go to 0. So even on the last trading day, typically what you're going to get is a higher warrant value on the bid quoted by Macquarie compared to what you can potentially get back at expiry. But in order for you to get back something at expiry, we need to look at the strike price of the warrant. In this case, the strike price of the warrant is $2.15. Now, in order for you to get value back at expiry, basically Seatrium shares need to, on the last 5 days before expiry, need to have an average closing price above $2.15. If it was below $2.15, you get nothing back at expiry. Okay, and as an example of why you should be cutting losses or exiting from the warrant before expiry. Basically, if Seatrium shares were quoting maybe just below $2.15 a month before expiry, you will still see a warrant bid price. You still see a value whereby you can exit from. But at expiry, if it finishes at $2.15 or below, you're going to get 0 back. Okay, this is why you shouldn't hold a warrant until expiry. And typically what we find is that people who hold the expiry usually are those who are unwilling to cut their losses, right? Their views are wrong and they're not willing to cut losses on their magnified losses. And what they find is then they are left with 0 value at expiry. So that's what happens at expiry. In summary, Seatrium shares need to average for the 5 days before expiry above $2.15 for you to get value back. And what we'll do is we'll send you the intrinsic value or the value of the warrant for which is in the money. We'll send that value to you, to your address lodged with CDP, and you get a check payment for that. But like I said, with warrants, you're meant to trade in and out of it way before its expiry date. The tools are selected and calculator are meant to tell you the maximum holding period, and it's typically way before the expiry date. So hopefully you get out of it before the expiry date and don't wait till the expiry in order to get out.
All right, thank you so much, Jamie, for explaining that point. So just to do a quick summary, so basically, guys, for warrants, right, it's not meant to just buy and then you see the expiry date there and then you really wait until it expires and then you feel very happy about it. No, right? It's to really get in and out way before the expiry. All right, of course, the faster the better, and that's the whole point of warrant. So even like if the price were to go like to $2.15, so if you buy the underlying, if you go to $2.15. You would have made money on the underlying, right? But for the warrant, that is just like you might still lose because you hold it all the way to all the way to like expiry. So just take note on that, right? We want the price to move fast in your intended direction. That's for warrants. Okay, so I think maybe Jimmy, can we do like one more question and then be quiet it?
I think there is one last question from, actually 2 questions, 2 comments.
Yeah,
one from Food Lover. I love food as well.
Okay.
So I feel you and AACL. I'll just quickly take it. Food Lover, what is the cost of warrants? Well, the cost is basically the price of the warrant that you see on the offer. In this case, I think it was 3.2 cents for the Seatrium warrant right now. So Seatrium shares are about $2.04 versus the Seatrium warrant, call warrant of NPEW. Right now, it costs about 2 cents, I believe. So that's the cost that you have to pay, a lower outlay because the warrants cost a fraction of Seatrium share price. But other costs associated will be your brokerage costs, the trading fees, which will again be a lot less than the brokerage costs, as well as the trading fees that you pay for the shares, because it costs only a percentage of it. In this case, it costs about 1.5% of the Seatrium share price. So the cost should be quite low. I mean, for the exact brokerage cost that you have to pay in this case, you might have to ask Joey, or whichever brokerage platform you're using. That really is the cost that they will be charging you. Okay, I hope that answers the question. I think, and then finally there is a comment by AACL, which I hope we address. So AACL, you said ideally buy Seatrium shares and buy put warrants to hedge. Well, one, LJGW is in fact a call warrant and not a put warrant, so there's a bit of a misunderstanding there. And why is that why is that a call warrant instead of a put warrant? I'll quickly tell you. First of all, again, if you go to our website, you'll be able to see that it is a call here. Under warrant terms is stated call, but within the warrant name itself, you can tell whether it's a call or put warrant. Basically, Seatrium, which is the underlying tracks, followed by MB, which is Macquarie Bank, and then you see that it's either ECW or EPW. Now, CW stands for call warrant, which means it will move alongside the underlying to go higher when it goes higher and go down when it goes down. PW stands for put warrant, which means it will increase in price when the share price goes down. So it's an important difference that you need to know. In this case, just make sure that you identify correctly the warrant you're buying. In this case, we only got call warrants over Seatrium. We don't have a put warrant, so you can't hedge that way. But the other thing that you mentioned about hedging, which is something you need to know. If you're bullish, in this case, based on Joey's view, you think it's already a good entry point and it's going to go up to 240. You probably don't want to buy a put warrant to hedge, would you? You probably want to buy a call warrant to leverage on that view, unless you think Seatrium shares could potentially come off in the short term. Then potentially you want to look for a put warrant to hedge. Yes, that can be the case, and that's what you want to do. If you're a long-term shareholder who is long Seatrium shares or any shares for that matter in the long run, and you think could pull back only in the short term because geopolitical tensions, earnings season coming up, basically event-specific risks that you're looking at, then you buy a put warrant to hedge. Because otherwise, if you buy the shares because you're bullish, and then you buy a put to hedge, in this case, the put warrant will magnify, right? It will produce magnified returns, whether it's a loss or a gain. Then you're basically netting off your gains and you don't get anything, right, from your view. So buying a put warrant to hedge is really for the short term when you think it's a sharp pullback, but as a long-term shareholder, you're holding on to it. Otherwise, if you think Seatrium shares, you're not currently a shareholder, it's just going to go up in the short run to $2.40, then just buy the call warrant, not the put warrant to hedge, okay?
Okay, thanks, Jamie. All right, so essentially, right, if you want the price, if you think that price will go up, you buy a call. If you think the price will go down, you buy a put. All right, so that's the direction that you want, right? Okay, Jamie, maybe one more question I saw, like what's the difference between, you want that?
What's the difference between trading options and warrants? Bright Star. Now, another very good question, a really common one that we get. So a really quick one. Essentially with options, they can be traded on the OTC market. Of course, they can, they're commonly traded on the exchange traded options market, which are all OTC transactions, whereas warrants are listed on the SGX. In this case of Singapore warrants are listed on SGX, they are security. So retail investors, you can trade it without, the call margin calls. You can trade it on your contra account. You can trade it on your cash account. And that's one of the important differences. So I would say it can be more easily accessible, but more importantly, you don't risk margin calls. Now, the second difference is with warrants, we have designated market makers across all our warrants. So all the warrants that you see on SGX, there is a designated market maker to provide prices and liquidity. While with options, in some markets, there are designated market makers. In other markets, like the OTC market, there isn't a designated market maker. So it depends. The liquidity can vary, depends on whether there's a willing buyer or seller in order for you to transact. And the third most important difference I would say is with options, you can do a naked short. You can sell the option and earn your premiums. But what's the downside of that? The downside is that potentially you can have unlimited losses, right? If you're, the buyer of the option was correct, right? And continue to hold to the position. Now with warrants, you can only go long. If you're bullish, through the call warrant, you buy. If you're bearish, you don't short a call warrant, you buy the put. So in both cases, you're always buying. And just because securities listed on SGX, you can't do a naked sell position on that. You have to be subject to the buy market. So that's an important difference because it means that with trading options, because you can go long short, you can go both long and short on the options. You can do various trading strategies like the butterfly, the straddle, the strangle, etc. Many complicated trading option strategies. But with warrants, I think it's a lot simpler and more straightforward. You either buy a call or you buy a put based on your view on the underlying, your buy entry level, your exit levels on the stock, as well as your cut loss level. So I think it's a lot more straightforward, in my opinion, when it comes to trading warrants versus options, where it involves more complicated trading strategies and potentially unlimited downside. Right, Star, answers your question. Now, Joey, we have had a lot of good questions today. And I'm excited to know which you think has been the best question that has been asked and, potentially wins a $10 voucher in your opinion.
I think all are very good questions. Thank you so much, guys, for all of those who have asked questions. We have Wilson, Bray, Food Lover, AACL, Bright Star, all very good questions. But let me just maybe pick one of the, I would say, very interesting question as well. And that would be like, what happens to the warrants after the expiry date? I think that is a pretty good question because most people wouldn't know what happens after expiry, right? So I think to me that is maybe a good question. What do you think?
Congratulations, Kam Chong. Well, you're Joey's pick on the best question asked. But I have to say it was very hard for me to pick because I think all of the questions have been really, really good. But hopefully we see you on the next One Good Trade show and you continue to ask really good questions and you walk away with a $10 voucher. I believe, Joey, you're going to get in touch with Kam Chong after this show.
Yes, definitely. Just reach out to us, right? Drop us an email. All right, you got my email. Just drop us an email. My team will reach out as well. All right, and we'll send you the $10 voucher sponsored by Macquarie. All right, so I think we have pretty much come to the end. All right, come to the end of the One Good Trade live show. How many of you got some value? This type V for value. You have done a little bit better on what is warrants, how you can take a position using warrants. Type V for value. All right, thank you.
I'll say I've got a V here. I've had so much value, and I think apart from your view, Joey, what's been most enjoyable is being able to interact with you guys by answering your questions and getting a sense of what you're concerned about with regards to warrants. Hope to see you guys on the next live show.
Okay, thank you so much, everyone. All right, have a good week. Thank you. Bye, everyone.
Good luck with markets. Bye-bye.
VV, awesome. Thank you so much. All right, thank you. Bye-bye. Bye, everyone.
Bye.